wanted to show you is this is the list of breakouts that are listed on the breakouts page on the website. This first trade is ADI, Analog Devices, and you can see the trend was clearly bearish. And what looked to me at that time was a little bit of a head and shoulders pattern forming again. And so I entered pretty aggressively right about here and put my stop loss above this former head. Now the mistake was classically, and according to classical technical analysis, is that I was premature. I should have waited for it to break this here neckline. And you can kind of see what happened. It went against me, and right about there I got stopped out on a pretty heavy gap. It'd be interesting to see when that gap fills, and you can see what's gone on since then. So we'll go down to the next one. APA is Apache, and the nice thing about this one is it's clearly had a bearish pattern, and right where the blue circle is where the entry was on a nice Fibonacci 50% retracement. Going back to that time frame, it was a beautiful looking short. I mean, you can see there was just everything right with it as far as going short. It was coming up to a former resistance level or former lows from here, and also the 50% line off of that move. So it really looked good. Since then, it kind of has just kind of piddled around and then gone up and just about took out the stop loss. I chose a really big stop loss on this one because I was really going for a big reward. So basically I really wanted to make sure I was doing about a 50-50 on it, reward to risk ratio, and it coincided with a nice healthy stop loss to give it plenty of wiggle room. And so here we are today, still not sitting too bad. It's not looking good though, but we have had earnings, and it had a little bit of a bump out of it, but we'll see. We got a little gap to fill here and a little gap here to fill, so haven't been stopped out, but I'm not changing the trade whatsoever. Next thing we're going to take a look at is DBB. Now the thing about this one is you look at this huge bearish trend, and it certainly had bear written all over it. But what happened is that if you look at this pattern, it's kind of ugly, it's not too bad though, is you can make the case for a cup and handle pattern. And although it doesn't quite fit the bill classically, and I'll get into this, I'm going to be producing a demonstration video on all the particulars of a head and shoulders, or excuse me, a cup and handle pattern. And this little ridge right here wasn't quite enough to clearly fit the criteria, but I went ahead and made the move anyways, based on the strength of the trend. I entered on that blue oval. The red line, or this red rectangle, was where the stop loss was, and since then it has gone on to hit the first target. And you might want to say, well, why is it so much higher? That was based, normally you guys know I picked the 1272 as my first target. That one I wanted to get a little bit more room in it. The risk to reward ratio wasn't quite good enough, so I stretched out the reward to balance out the risk a little bit. And sure enough, we hit that on Friday. It was a great thing. Moved the stop loss up. So next thing we're going to do is we're going to shoot for this. We're going to shoot for the 1618, or this next target right here. So we'll go ahead and move that over here. The next one on our list, let me make sure, yeah, like I said, we'll talk about the cup and handle on the next video. Look for it in the continuing education portion of the website. This is IAG. It was a great looking trade, ascending triangle as the write-up shows, and you can see it also burst through this former high, which was a resistance, and it did so on some pretty nice volume. So that's a pretty good sign, plus the ascending triangle really made me feel good about this trade. The blue oval is the entry. The first target was up here, and lo and behold, it hit it really nicely. The stop loss was there originally, and now the stop loss is here with the second target up there. This one I think continues to have just a great probability of hitting second, even third targets. I like the volume coming up. The volume was kind of fading as it went nowhere, which I think is a bullish sign. And then another little volume spike through this little burst. And these two little volume bars here disturb me a little bit, but we'll live with that. I mean, once I set a trade, I don't make any changes. It doesn't matter what news is or anything. And we'll touch on that a little bit later. Ivanhoe, let's see here. Another great looking trade, had a nice strength, great relative strength, came down and went for a combination of a 61% retracement entry coinciding with a former support level, and got in at the blue oval, captured the first target just a hair under the former high, moved the stop loss up to there. It's gone on to hit second target, so now the stop loss is up here at entry, so we have a risk-free trade. We're shooting for that third Fibonacci target. So all in all, this trade, boy, that should turn out to make pretty close to 80% and hitting all three targets. And those are just the ones you got to be in the game to play them. And so really liking how that one's working out. MRCS is another interesting stock. There's a member on the site that works for the company, and he's in the sales department. And he said, I remember we were discussing it right here. So this is all we saw at the time, and I said, you know what? It's awfully strong looking stock. And he said, well, we just haven't had a very good sales going on this past quarter. I don't think things are looking too good. Are you sure you want to do this? And I said, well, technical analysis says the trend is strong and doing its relative strength in its sector, and the S&P, it's just killing it. So I said, we're going to go ahead and make a trade right here anyways. And so let's just see how this thing has worked out. Now, the red box is obviously the stop loss, and the green target is the first target. And you can see, boy, we are just about coming close. It is very, very promising looking, and earnings is looming on the horizon, so we'll see. The next one we got is Netflix, and it has just been killing it. It has been strong in the market. Its relative strength is just great. I mean, you look at this thing since '07, and it's just, I mean, it's almost like it doesn't even look like October phased it much. I mean, it's just like a little hiccup for this stock. And so this one has been really, really strong. Got in the blue oval. Stop loss is down here, and we're getting awfully close to the first target. And it's a good opportunity to bring something up. A question was asked to me the other day. Do you ever change your trades? I mean, based on news you might hear, what's going on in the world? And my answer is no. I try to not pay attention to news as much as possible. You can see, like, for example, this was earnings. And this just really killed a lot of folks, and they were just selling like crazy. And I can understand it. I mean, the news probably wasn't very good. I don't recall what the news or the earnings report was because I just don't pay attention to it. But you can see it's bouncing back, and it's really looking to fill that gap. And so, that's what's, my rule is once I set a trade, I trade on technical analysis only, and I never trade a trade or change the trade.